Well, it's going to be largely a sequential decline in the oil and gas sector in Q3. Remember, Q2 was strong for a lot of companies. But let's start with the macros first. Brent prices, they averaged at $83.7 a barrel, which was a decline of 3.5% sequentially. Singapore GRMs also declined quarter on quarter to come in at $5.6 a barrel. Now, how would all of this impact stocks? Let's start with Reliance Industries. Here, the EBITDA is expected to increase YOY by 17%, but it will be flat on a sequential basis. O2C segment would see a decline due to declining GRMs, but it would be offset by strong performance in the retail segment. Now, on to the oil marketing companies, where we will see a big decline on a quarter-on-quarter basis in EBITDA because of higher base. Lower refining and marketing margins will put pressure on earnings. Additionally, Russian crude discount also declined in the quarter. So OMCs could see a decline of 70 to 80% in EBITDA on a quarter-on-quarter basis. GRMs, they are expected to be between $8.5 to $11.7 per barrel, with BPCL topping this list. Now for upstream companies, despite the windfall taxes, decline in crude prices as well, their adjusted realizations have sustained at $75 a barrel mark. And for ONGC, crude output is expected to decline by 2%, while for Oil India, it is expected to increase by 7%. EBITDA, however, will see a decline of 14% for both the companies on a quarter-on-quarter basis. Now, city gas distribution companies, they've seen a decline in LNG prices in Q3, but there has been a hit on volumes as well. So for Gujarat Gas and IGL, only a 2% increase is expected, and for MGL, it is expected to be only 1%. This is for volumes. EBITDA per unit is expected to be flat for IGL and Gujarat Gas, and it will be a decline for MGL on a high base. Now for gas utilities, it will be largely lower as well. GAIL's PAT is expected to decline by 16%. For Petronet LNG, it is expected to be a 3% decline QOQ, and for GSPL, EBITDA is expected to decline by 7% on a sequential basis. Let's talk about valuations now. Oil and gas space continues to be reasonable despite a big run-up seen in some of these stocks. Reliance Industries is trading at 21.4 times. Of course, it does have a lot of businesses. ONGC in Oil India is between 4.5 to 6.1 times. OMCs are trading between 5 to 8 times, with IOC topping that list. For city gas companies, Gujarat Gas continues to be the most expensive, followed by IGL, and then there's MGL. The gas utilities are trading anywhere between 11 to 17 times. This is one-year forward earnings. Thanks for tuning in to CNBC TV 18, and for more news and updates, follow us on all the social media platforms.